Hello, hello, hello. Happy Thursday to all of us. Welcome to today's live stream on this beautiful Thursday. I hope you and yours are doing great. We have another opportunity to talk about our industry, the crypto industry, as crypto enthusiasts. We also get to learn about the industry, various topics, and then we also get to zoom in and discuss our ecosystem, as we can always build bridges, build parallels, and see what value that we can add into this industry. With that said, once more, welcome everyone that was able to make it today. We're always excited, always looking forward to have these sessions with you all. And especially if you're new in the ecosystem, in the community, we welcome you wholeheartedly. We embrace you and welcome you to the community. With that said, you see the topic of today is token inefficiency, and we'll touch on some current events as well, briefly. But then we really want to get into today's topic, as there's quite a bit to cover on token inefficiency. This is something that is very important for us to understand, as it is literally something that, when addressed early, it can really go a long way, and it helps a lot, especially as an ecosystem early on, tackling these challenges, ensuring that we're on the right track and our token economics are good. With that said, you know the drill. Want to come to you first, welcome you, acknowledge you, whoever was able to make it here today live with us. After that, we're going to get to today's session, and then we'll come full circle as we close out the session as well. Check with you whether there's any feedbacks, any questions open that we can dissect, we can answer, and then I will call it a session for the day. With that said, once more, welcome everyone, as more people are entering the space. Those who are new in the community, welcome. Let's start with, let's see who is here. Acknowledge you and welcome you to the live stream today. Brother Dave is here. Great day to you, my brother, and community. Efficiency is what is lacking in the market. Absolutely, Brother Dave, this is absolutely what is lacking. These are just points to just highlight the potential, that this market still has. And this also, we always say we're so early in this industry, but these are things, these are items, these are factors that really show how early we really are in this industry, because these are items that are vital, that are fundamental, but they are still yet to be addressed. So we'll go through these sessions today. We have Queen Lati here as well. Welcome, Queen Lati. Always a pleasure seeing you in the community. Another exciting day to sit down and listen to the developer of the Bullrun ecosystem as he unpacks it to the community. Take us through, my brother Steve. Always a pleasure seeing you in the community, Queen Lati. It's always a pleasure. Thank you for your positive energy, your commitment, your dedication, and it's always nice seeing you in the community as well. And my great brother Theo is here as well. Always a pleasure reading from you, my great brother Theo. Greetings, great brother Steve, dearest Mama Wino, and my entire awesome Bullrun family. I am blessed to be here with each one of you beautiful souls. Can't wait to get this session started. Let's go. The feeling is mutual. Always a pleasure seeing you in the community. Always a pleasure having you here with us in the community, brother. My great brother Theo. Also, as always, you see, we always ensure that the tweets go out. So Queen Mother Wino, thank you so much for the tweets. Thank you for everybody that participated in making the banners, labeling them, making them look, representable, and so we can put them out. And of course, thank you for everyone that is participating, engaging with these tweets as well. They always have very strong messages. X is a powerful platform that has a deep reach. So as usual, let's engage with these and see how we can meet or engage as many people as possible, bring awareness to our industry, our ecosystem as well. So Killer Whale is out, Survivor is out as well, so is Bullrun as well. So let's ensure that we engage with the streets community. Queen Val says, hello, Mr. Steve. Hello, Queen Mother. Happy Thursday to all of us Bull Runners. welcome to all our new members. Feel free to join our communities. Absolutely. Thank you very much, Queen Val, for putting the Telegram groups, adding the links here. This is the Bullrun link. We have the Survivor Telegram, and so we have the Killer Whale and Survivor Telegram here as well. Killer Whale is here. So feel free to engage, add, join our social platforms. We are very active on Telegram. We are very active on Twitter as well. And as you see, we are also active on YouTube as well. So you're all welcome to join our community. Thank you, Queen Val, for the links. We have Queen Beatrice here as well. Welcome, Queen Beatrice. Always a pleasure seeing you as well. Good evening, Bullrun community. We are here again, waiting to be educated, inspired, and informed by our very own brother Steve. Good evening, Queen Mother. It's a pleasure, Queen Beatrice, to see you here as well. Thank you for your commitment, your consistency as well. We are so pleased to have you here. As always, let's engage with the video. As the more engagement it gets, the deeper the reach it will have, and it will reach more people that can listen in, tune in, and be part of our ecosystem. We have my brother Glenn is here as well. Hello, Bullrun.Life family. Hello, brother Steve. Thank you for bringing us together today for more information and what's to come. It's a pleasure, brother Glenn. Always a pleasure reading from you, seeing you in the community as well. It's always a pleasure. We have I'm not sure if it's Queen or brother Salang. Welcome as well. Thank you, Steve. Thank you as well. It's always a pleasure seeing you in the community as well. We have Queen Senzeni. Welcome, Queen Senzeni, here as well. Good evening, Queens, and evening to you all. Good evening back to you too, Queen Senzeni. A pleasure having you here with us today. My great brother Cryptorizer is here as well. Good day, Bullrun family. The excitement is growing for this upcoming bull market. Absolutely, brother Cryptorizer. We are truly blessed to be part of this amazing ecosystem and community. Endless education for the investors. This is beautifully said, my great brother Cryptorizer. And this is what we're all about. This is what it's needed. Education, information, and inspiration. This really gives us confidence in making our choices, making informed and educated choices, and also to be informed on what's going on a global scale. So absolutely. We have Queen Grace is here as well. To our beloved Mr. Steve, our mom, Awino, and Bullrun family greetings. It's another beautiful day. We wait to learn more about our industry. Thank you, Steve, for your sacrifice to educate us. It's such a pleasure. Queen Grace, it's a pleasure having you here with us today. And most importantly, thank you for taking your time, Queen Grace, to be here with us on your special day. So on my behalf, on the behalf of the community, we all wish you a wonderful and a very blessed and happy birthday to you. Thank you for taking your time on this special day to being with us. So thank you so much. And we wish you all the best for your special day today. We have Queen Patricia here as well. Good evening, family. Good evening, Steve. Thank you again for coming to enrich us yet again. Stay blessed and protected always. Always a pleasure seeing you, Queen Patricia. Thank you as well for your commitment, your consistency as well. I hope you're enjoying the European Cup as it's going on. My favorite is Germany. Let me hear what your favorite is. I believe Germany is going to take it all the way. They've been the most consistent so far. I see Princess Mel is here. Queen Mel is here as well. Always a pleasure seeing you in the community. Welcome again. Good evening to you too, Queen Mel. And happy to be here. We are very happy to have you here as well. And so are we, Queen Mel. It's a pleasure. And thank you for taking your time and being here with us as well. We have Queen Grotto here. Let's go. It's a pleasure seeing you here as well, Queen Grotto. Always a pleasure seeing you in the community. Welcome to today's live. Queen Cozy, as well. Greetings, Mama Wino, Brother Steve, and the entire Bullrun family. Trusting that we are all well and excited. I'm looking forward to yet another season of inspiration and education. Always a pleasure seeing you here, Queen Cozy. Thank you for your leadership and your consistency as well. It's always a pleasure having you here in the community. With that said, I want to acknowledge all of you for your time that you took on this beautiful Thursday to be here with us. Welcome all of you and the new members as well. And let's get to today's session, as there's quite a bit to cover. Bear with me as I'm sharing my screen here so we can get the session started. As always, we always like to start overall to look at the market and understand what's going on in the industry. And just briefly, just look at what's going on. Nothing really much, not much excitement. Everything is going sideways. Bitcoin is always around 65. It was below 65 earlier today. Ethereum is around 3,500. If we look at the fear and greed index, it's neutral right now. There's really anticipation going on ETH ETF. There's so much going on around the globe right now that is still uncertain. However, the biggest news that we're about to look at is involving Ethereum and the judgment that came by the SEC yesterday. But as far as the market, it's just going sideways. It's anticipating. We're all just going sideways and waiting to see what's about to happen. Really not much excitement in the industry. Just to touch on the biggest news so far, as we are all aware of it, this was old news. This was from yesterday. As you see, June 19th, the SEC officially ended probing consensus, not just consensus alone, but the entire Ethereum 2.0 as well. So the US regulator closed its investigation into Ethereum 2.0, consensus said. Consensus are the owners, or better yet, the founders of MetaMask, for example. They were sued by the Security and Exchange, US regulators, US Security and Exchange Commission, for MetaMask, basically, and also for the staking part of it. But now officially, the SEC pulled back and stopped and closed all the investigations. So this is amazing news. This is a major win for the industry. And this just puts us one step further towards where we need to be as an industry. Because like we always talk about Ethereum, maybe I'm just very biased, but on Ethereum, however, the truth be told is that Ethereum is just the blockchain with the most applications, with the most use cases. And if Bitcoin is considered digital gold, Ethereum is definitely digital oil, as it is the Internet of Things. It is where most applications, stable coins, exchanges, lending platforms, right? And oracles, stable coins like we just mentioned, and even now tokenized items, right? Tokenized securities and assets are about to be built on top of Ethereum. So this is amazing news. This is great news for us, as it puts us one step further. And with anticipation also of the Ethereum ETFs coming in less than 2 weeks, they should be apparently, according to Bloomberg ETF analysts, they should be here or approved right on or before July 2nd. And this is amazing. That happens, and it has anywhere such a success such as Bitcoin had. This is, of course, will be something major. So we're looking forward to these milestones, these steps, these wins. And as we see that now we have institutions campaigning for crypto, mainly for Bitcoin, Ethereum, and the cryptocurrency as a whole, this just legitimizes our industry even more. It puts us on the map. And with the regulations being put in place, we have 10 days to go in Europe June 30th, like we said, MICA will be in full force, full effect. Many stable coins such as USDT, the largest one, is already being pulled down, right, from major exchanges, just due to the regulations that are being in full effect in Europe by the end of this month, June 30th. So we see all these items coming together. We see everything, all the pieces falling in line. And like we discussed earlier, especially for the US, this plays a major role. Embracing crypto plays a major role. So this really is no surprise. As we said, US embracing the blockchain technology is the only way out to really manage their debts and to have a good grip on their debt crisis that is spiraling out of control. And this is why you see the debt expert, who is Larry Fink. He's an expert in debt, and he's the one literally taking the leading the charge, and is literally the fourth arm of the government, and really pulling the strings and putting things in line, ensuring that tokenized securities are put in place already. The BUIDL token, like we said, it's also deployed on Ethereum blockchain. It's already close to 400 million already. And of course, like we see, the rest of the assets are about to be as well deployed and tokenized also on Ethereum. So Ethereum plays a major role. I just want us to really understand this. And also on this note, what I really want us to understand is that one thing we can really be sure of, not all of these blockchains are going to be on top. There'll be a big consolidation happening. There'll be only a few large ones, just like in the real world. Only the large banks you see around. You hear Citibank, JP Morgan, UBS. It's always Goldman Sachs. It's always the same large institutions that are really dominating. If you look at the asset management side, same thing. You always hear about BlackRock, Vanguard, Fidelity. Those are the really 21 streets. You see, like, there are always 3 or 4 dominating the market, the industry, right? And we are going to experience the same as far as layer 1 blockchains as well. So with Ethereum being the second largest cryptocurrency overall, however, it is the largest smart contract blockchain with the most applications, the most innovations, the most developers, most liquidity. It is just and right now experiencing the same flood of attention that Bitcoin experienced due to the ETFs that are about to be flooded out. This is major. And one thing I also want to highlight as far as Ethereum is that institutional investors, they love passive income. They love revenue, right? And as we know, unlike Bitcoin, Ethereum has revenue. Ethereum has a passive income capacity. At the same time, this is the fast asset that literally is deflationary, right? I always like to show us this ultrasound money. The more you use it, the more it's adopted, the more deflationary it becomes. Currently, it is inflationary. We have to say that. The past 7 days, let's go to 30 days. Even the last month, it's still inflationary. But if we go to a year, we see how deflationary it is, right? You see the negative sign. So, however, if we look at the last 30 days, for example, we see how inflationary it is. So being deflationary is key. And this is an asset, a commodity that doesn't just give you revenue incentive. It doesn't give you distributions, but it also has the potential, the more it's being adopted, to really burn the most, right? So this is a function that is very important, and it makes Ethereum very unique. It puts it as a very unique area compared to Bitcoin. Bitcoin, you can just purchase it and hold it. However, Ethereum, you can besides holding it, you can stake it, and it generates income for you. Institutional investors love this because they can produce multiple products with it, right? If you have a commodity that has revenue, that you can stake, you can produce multiple derivatives, multiple products with it. So this is a much more attractive asset commodity for institutions. You can do so much more with it. You can be very creative. And this is what really will put Ethereum on the map now that it's been cleared by the SEC, and now that the ETFs are about to follow through, now that the institutions are really being informed and educated on what Ethereum really is. It is literally an internet where you can deploy, develop multiple applications. It's like back in the 90s, being able to invest in the technology itself, which was the internet. With Ethereum, that's the reality right now. And once institutions really can wrap their head around this, that you literally have this technology that is deflationary, right? That gives you that you can stake and is giving you dividends basically. And on top of that, it's the technology itself that you can directly invest in. You can stake it, it's deflationary, and it's literally the internet, the modern day, the step above the internet. So this is very important to understand. And because we are on Ethereum, we are using Ethereum, this Ethereum success lifts all boats within the Ethereum blockchain. So I just wanted to really highlight this and just underscore its importance, and moving forward, what we can expect. So right now, even if we see that the markets are just calm, really not much going on, let's not be moved, let's not be discouraged. This is normal, this is what's to be expected, because what I want us to understand is that once everything is lined up properly, the interest rates start getting cut, the regulations are clearer, and the liquidity really starts being flooded into the market, that's when we'll really see that massive parabolic bull run entering the space, and we won't have to ask each other whether the bull cycle is here or not. Every one of us, we will really understand and know that it's literally here. So that's the biggest news from yesterday that is still relevant today and in the future, of course. So let's really get to today's topic, right? We discussed the efficiency, the token inefficiency that we see in the market. This is a very, very important topic. As an industry, we should really understand this and embrace this. And I love this article. I've used this in our last week's event as well. And I just want to emphasize just 3 points here to really underscore and highlight the importance of token economics and tokenomics. And I want to highlight using real world applications that we'll go through today. Will really underscore the inefficiency that is in the market. So what is tokenomics, token economics, right? A big part of a crypto project's success can be attributed to its tokenomics, right? And but what does the term really mean? So by now we know that it's a word play between token and economics, and we also know that cryptocurrencies, tokenomics can make cryptocurrencies valuable and interesting to investors, right? And the underlying technology is the same, right? For example, Ethereum, we're all using the Ethereum blockchain. So the underlying technology is the same everywhere. What sets us apart with us, I mean, these different cryptocurrencies, are token economics, literally. That's what sets us apart, because the underlying technology is the same. We're all using Ethereum. So to set yourself apart, literally, you have to be creative, and you have to develop something that makes sense. And let's look at it. That includes everything from token supply, right? And how it's issued, to things like what utility it has. So one thing that we can't stress enough is the token supply and how the supply is issued. We're going to look at specific details so that we really understand what we mean. Community, there's nothing more beautiful than to be informed and educated, because that way we'll really be confident enough, and most importantly, we'll be able to make informed and educated decisions. So let's look at it closer. So tokenomics, token economics is an important concept to consider when making an investment decision, because ultimately a project that has smart and well-designed incentives to buy and hold tokens for the long haul, this is the more likely to outlast and do better than projects that hasn't built an ecosystem around its token. So once more, we see how longevity, developing a project, an ecosystem with the long term in mind, right? Those take longer. However, they will always outlast and do way better than projects that don't have or have not built an ecosystem around their token. So a well-built platform often translates into higher demand, right, over time as new investors flock to the project, right? This is very important. We always say that incentives are for the long run. And if you take your time and develop something that literally is addressing challenges specifically in the industry, in the long run, that will garner attention. And attention, you want to draw attention with something that is quantifiable, meaning that you can go to Etherscan and verify. And this is what we're about to do as we progress. So likewise, when launching a project, founding members and developers need to consider the tokenomics, right, of their native cryptocurrency carefully if their project is to attract investment and be successful. So it's in our hands to be revolutionary, to really be creative, and to always have the community at heart. Because like we always say, if you want to be successful in this industry and in life in general, find a way how you can service the majority, the retailers, you and myself, in the best possible way. And if you can manage to find and develop a platform that can service them by empower them, enabling them in order to be part of this blockchain technology, that's a winner. You can do that, great, you know. So one more thing that I want to add, or two more things, the structure of a cryptocurrency's economy determines the incentives that encourage investors to buy and hold a specific coin or token. We always talk about this, incentives, right? Economy is all about incentives. Economy determines the incentives. We always talked about this. If there's any takeaway from today, let's understand that economy and incentives go hand in hand, right? This is what encourages the investors to buy and hold a specific coin, right? Why would you hold something that you don't have incentives? And we're going to look at it more closely. Just like how fiat currencies are all different, each cryptocurrency has its own monetary policy. We need to start looking at cryptocurrencies this way. You know, we have to look at them as economies, right? As monetary policies that you have to read through, you have to understand. And once you understand it, you can now make your decision. Are there sustainability incentive enough? You know, what's the monetary policy? So that's very important to understand. So tokenomics determine two things about the crypto economy. Again, the incentive that set out how the token will be distributed, and the utility of the tokens that influence its demand. At the end of the day, economy is about supply and demand, right? Supply and demand has a huge impact, right? This is so simple to understand, but yet many projects don't really understand it and implement it. And this is setting the stage for today's session. This sentence right here is setting the stage for today's session. Token inefficiency, right? And this is through incentives that set out how the token will be distributed and utility of the tokens, right? And this influences its demand. And also supply and demand have a huge impact, right? This is very important. So let's look at something specifically. I always like us to verify. You know, it's easy to speak and to just assume, you know, but let's always look at another source of information. Let's verify what we just said. So here is one of the, actually the largest exchange on Solana. It's called Jupiter. They launched earlier this year, and they have an amazing supply, like a high supply. And the co-founder just proposed a 30% cut of its total supply. Just the proposal alone engaged the community to spark 7% gain in the token itself. This just shows you how the community embraces and appreciates deflationary aspects. If you can add deflationary aspects in a token, in an ecosystem, those who have been around, those who really understand tokenomics, they embrace it, right? And the founder was just introducing or suggesting that they want to reduce the total supply, right? Total supply is 10 billion. They want to reduce it, cut it by 30%, right? And also lower the emission. Emission is basically the inflation rate. So it's an inflationary token, but now they want to lower the emission as well. So you see how the developers now, they saw that the way they launched the token, it's not solid, right? Let's look at it, for example, Jupiter. Let's look at it. It has an amazing use case. It's the largest DEX. It had one of the largest airdrops, right? However, if you look at the long term, right after the airdrop, it just kept going down, right? And on that note, I would also like us to go to the next topic. I just wanted to show you Jupiter. It's the largest. You see it here. It's on Ethereum, on Solana. It is literally the largest exchange, and the most used actually exchange as well. However, its tokenomics are really weak, and this is why the co-founder suggested that we need to cut the supply. The total supply needs to be cut, right? And also we have to reduce the emissions, which is the inflation rate. So you see how we just read here. It's very important that you understand that the incentives set how the token will be distributed. So your incentive need to match your token distribution. So if your token distribution is not incentivizing holders, you are in trouble, right? So this just shows, this is why the token sparked by 7%, just because they know that if you cut supply and if you decrease inflation rate, that's usually a good sign, right? So that's for that. Another thing I want to also highlight here is this, because Jupiter also was one of those tokens that were airdropped, right? And I want us to really build on top of what we just read earlier, right? Token economics are very important. And many times, oftentimes, developers try to cut corners, because the hardest part in the industry, in cryptocurrencies, community development. It takes a lot of effort, it takes a lot of time, you have to be patient, and that's the hardest part. You have to be present, you have to be consistent. It takes a lot of effort. So to cut corners, airdrops are very, very famous amongst developers, right? It's easy. You just give people free token, as many people as possible. So you don't have to do community development. You can give 100,000 or 1 million people free tokens, right? And now immediately you have 1 million wallets, for example, with your tokens. So, but this is good as far as it looks like, okay, now we have 1 million individuals, 1 million community members within a few days. However, the issue here is this, okay? Founders are seeing entitled airdrop farmers dump their tokens, right? Questioning the loyalty gained from airdrops. So why do you wonder as a founder that these individuals that you give free tokens to, they're just going to dump their tokens right away? What do you expect, right? With significant declines post airdrop, after the airdrops, the tokens just drop. And the best example was here, like I showed you. Jupiter, right? We looked at Jupiter right after the airdrops. It's been declining and it's still declining. So them trying to cut the supply and reduce the inflation rate is to control the damage. The damage is done, right? So it's just damage control right now. They're just trying to reduce the supply, reduce the inflation rate. But we always say you have to do it the fast from day one. The airplane is already in the air right now, and now you're trying to change the engine, fix the engine. It's not going to turn out well, right? You have to do these things right from day one, not midway through the air. Anyway, so this is an issue, right? With significant declines post airdrop, is it time for industry to move on from airdrops? This is cutting corners. Of course, it's easier to just give 100,000 free tokens and then you have 100 community members right away. It's easy. You don't have to do all the community development. You don't have to put in the effort. You just give people free tokens and hope that they'll stay with you. But obviously, they'll dump and leave, go to the next airdrop, right? And founders watching entitled airdrop farmers complain about their allocations. So first of all, they're complaining, oh, we didn't get enough allocations. And then in the same breath, these farmers immediately dump their tokens, are likely reconsidering the loyalty gained and cost. These are also costs. These are tokens that eventually were pumped, and all of that. But during the airdrops, they're being dumped on unassuming investors, right? Eigenlayer is a blockchain, ZK is a blockchain. So these are all similar behavior. We can do better. Time to innovate again, right? So innovation takes time, takes patience. Innovations takes work. Community building takes a lot of work and consistency. And this is where the separation is. A lot of people don't want to put in that effort. They don't want to put in the work. They're better off let's just airdrop to 1 million people and have 1 million members in the community and then move on from there and hope that they're not going to dump on us. This is what's going on, and we really need to do better as an industry, and it's time to innovate again. Rather, I would say it's time to put in the effort, put in the work, connect with the community, get down with the community, and do the community development. That's the hardest part. But once it's done, we saw it with SHIB from scratch. It works. You can do it. And the beautiful thing, you only have to do it once. So instead of giving people free tokens that they're going to dump and spoil, mess up the project, put in the work, put in the effort, start from the ground up, build a community from the scratch, and then go from there. So I just wanted to share this with us, that projects now are starting to catch up on not doing airdrops anymore because they understand that these individuals are just going to dump on them and move on to the next airdrops, and they're not loyal to these projects. And the way you bring loyalty is not by just giving people free tokens and airdropping them, but rather by being consistent, being present, and actually having a real utility and having a system, a mechanism that brings attention to them in the long term. It's like we always say, it's delayed gratification, right? Airdrops gives them the gratification right away, but then they dump and move on. But delayed gratification really gets them be part of the ecosystem and want to be also part of the community. That's how you really do it, but that takes a lot of effort. It takes a lot of time. And with that said, as usual, we have a craze, right? A meme coin craze has propelled not just Solana, but in this case, Solana has just been putting out more tokens, more meme coins than any other blockchain out here. And it really propelled Solana to unbelievable numbers, right? And the popularity and excitement surrounding these meme-based cryptocurrencies have skyrocketed, pushing Solana's token creation to heights never seen before. And this is not just Solana. This is on Algorand, this is on Ethereum, this is on Base, this is on so many other blockchains, right? And the point here that I want to take away here is that these meme coins are backed by retailers, you and myself. And the sad thing about these is similar to the airdrops, right? They usually catch on quickly, they skyrocket, but then once the hype, once the attention span, because humans, we have a very short attention span. Once all of that dies out, slows down, what's next, you know? And this is why sustainability is extremely important. Efficiency is very important. And this is the topic of today, token inefficiency. We looked at airdrops. It's not a good solution. Obviously, people will dump once they get the free airdrops, they'll dump it, go to the next, right? And token economics is very important as well. How you distribute the tokens, the token mechanisms themselves. Are they sustainable? Are they solving any challenges within the industry? These are things you need to consider. And we, as a crypto community, crypto enthusiasts, we need to do better. We need to be informed and educated, and we need to be always aware, you know, because it's an industry that is moving really fast. With that said, let's look at concrete tokenomics now here. Let's look at real tokenomics, and not just any. I'm not picking on Aave and or I'm not picking on Curve, or, you know, but I just like to pick them because they are literally, if we go to DeFi Llama, we see that they are literally the most popular. You know, you see Aave, it's the third most popular and largest application. You know, it's very popular. Uniswap, it's also up there in the top 10. So these are applications, and Curve 17. So these are very popular applications, and the best of the best, right? So this is why I'm picking them. And Aave, I'm using Aave personally too. So I enjoy using Aave, its utility, right? So let's look at it concretely. First of all, what are we looking at? Inefficiency, token inefficiencies is very important. And I want us to really understand this. So the first thing you want to look at always is there are three types of supplies. There's a circulating supply, there's a total supply, and then there's a max supply, right? So these are the three different supplies. The circulating supply is the supply that currently is available either in the liquidity pool or in the wallets of the investors. So liquidity pool plus the tokens that are in the wallets of the investors, that's the circulation, right? That's the circulation. So, and total supply is the supply that, what we just said, circulating supply minus the ones that have been banned, right? If you have a banning mechanism. So that's what the total supply is. And then the max supply sets a ceiling. This is the maximum amount of tokens that will ever be put out. In Aave's case, it's 16 million. Famously, for Bitcoin, it's 21 million, right? So it has a max supply. Beyond this, there are no other minted tokens. That's the maximum you'll ever see. So circulating supply, like we said, are the ones in the liquidity pool and in the wallets of the investors. Total supply are the ones in liquidity pool and the investors minus those that have been banned. And then max is the absolute ceiling. There won't be any more made after that. Also, what I want to highlight here is understand that due to its inefficiency, all-time high, which was during the last bull cycle in 2021, since then, it's down. Aave is down by 87%, right? 87% since its all-time high. So, and what I want to show us is here, it's 24-hour trading volume. Right now, it's at 137 million. And if we look at its all-time span, historic map here, this just shows you how inefficient Aave is, because first of all, it is the largest and oldest lending platform, so its utility is great, right? However, its tokenomics is inefficient. How can you have over 100 million in volume and your chart looks like this. It's not supposed to be like this. The way it's supposed to be is that the more successful the platform, the better. The more volume, you should use your volume efficiently. So if you have a volume beyond 100 million, we'll look at it in detail. We'll do the math at the end, and we'll see how we will be faring having 100 million in volume, how that will contribute to our ecosystem, right? But in this, I just want us to show you that inefficiency of tokens start with its supply, right? So if you have a supply that your staking platform just keeps minting new tokens, and if you stake Aave, you just get more Aave, right? So that causes inflation. And like we see individuals, it's not just with airdrops, but it's also with the free staking distributions that they get. Like if you get your, if you stake Aave, you receive free Aave, and same thing is going to happen. It's not just with airdrops, right? It's also with staking. So we really need to do better, and it's time to innovate. How do you innovate? You innovate by addressing the 4 challenges that we always talk about. You know, address the lack of liquidity. You see how we always talk about unsustainable staking distributions. This is exactly what Aave is lacking right now. They're having an unsustainable staking distributions that they're giving out. And then inefficient use of their volume. And this is obvious. They have over 137 million in volume. However, they're not using it efficiently. And we will calculate and do the math based on our tokenomics, and we'll see how inefficient Aave really is. Before we get to that, let's go to the Etherscan. So what are we looking at here? This, if you look at this, you see the amount of Aave tokens that are being staked. It's 17% right now. What does this low staking percentage tell us? First of all, Aave is known to be staked. You should be able to stake Aave tokens, right? It's a staking platform besides being a lending platform, right? So the way incentive that it has for you to use, the way they attract you to use their platform is by offering staking, right? So they're telling you you can buy Aave, stake Aave, you get more Aave. But this is an extremely low staking percentage for a large token like this, and one that is actually the 3rd largest. Aave is the 3rd largest on Ethereum. There is 12.5 billion locked on Aave. So this is literally the 3rd largest application on Ethereum blockchain. But how come there's only 17% staked? This shows you how individuals understand that we don't want to stake an inflationary token. It's not lucrative. It's not something that makes sense. You don't want to stake and lock up your token that is inflationary. It's diluting it. It's not sustainable. Nobody wants to stake a token that is inflationary, right? And you don't have to be a genius. You can just come here on CoinGecko, or you can also go to CoinMarketCap, pull up the map, and you see how inflationary this is, because the more stakers are receiving their staking distributions, the more they're dumping in the market. And if you don't have sustainable mechanisms in place, like we just read here, right, it's very important that the incentives, right, set out how the token will be distributed. And if your incentives are not sustainable, your tokens are being distributed wrongly and causing inflation and messing up the ecosystem, messing up the token. This is the inefficiency that we are talking about. So let's move on and see. We saw that it's only 17% that is staked, right? If we look at ours right now, just to be fair, ours is over 50%, right? Almost 55%, 54.9. So almost 55% of our supply is being staked. This is coming out of a bear market, and this is literally not even gone through a bull market yet, and not having anywhere near the 100 million in volume. But nonetheless, over half of the supply is locked away. This is what you would expect from Aave, right? The third largest application on the Ethereum blockchain, with over $12 billion locked in that on that application. You would expect more than what we see here, right? But due to its unsustainable staking platform and inflationary nature, smart money is not coming anywhere near this. And this 17% is probably the team that is locking it just to try to control the damage, just like Jupiter is doing, right? The team is reducing the inflationary rate, and they're getting ready to artificially cut the total supply. So this is just damage control that is being done here. Another thing I want us to look at is the way they reward their staking contract. This is their staking contract. In case you're wondering how you can get to this, you come to CoinGecko, and if you see where circulating supply is, there's an I here. And if you go down here, you see rewards contract, and you hit there, and it will take you right here. So this is a contract. This is their staking contract. This is equivalent to ours right here. This is our staking contract, right? So if I click here, I come here, you see, same thing. There's a contract, it's a smart contract, it's our staking contract. The difference with ours is that we are accumulating USDC, right? We are issuing USDC distributions through volume. We're using volume to generate these USDC distributions. But Aave, they have over 100 million in volume, but yet they're actually giving out Aave tokens, you see? And this supply keeps shrinking. Like if I refresh right now, you see 817,000 left, right? Let's refresh. It's 816. So this supply keeps shrinking, and eventually it will run out, obviously, right? And once they run out, the staking distributions are unsustainable. So that means it's limited to a certain time. There'll come a time where even if you stake Aave, you won't get any distributions because they run out of it. So this is inefficient. This is unsustainable. And these are the things that I want us to understand. And this Aave is not a meme coin, like I said. Aave is far from a meme coin. It's a utility and governance token. It's the most used lending platform. It's the third largest application on the Ethereum blockchain. Actually, among all blockchains, it's the third largest one. And still, they have a very, very weak tokenomics, And this is what's bothering Aave right now. Let's move on from Aave and let's look at Curve, right? Curve is another one. Just to put it in perspective, Curve is on number 17. Curve is very unique because they are the ones who literally came up with the system where you can lock up your tokens between a year and 4 years, and then again you receive more Curve, right? So the more tokens you lock up, the more Curves you get. And so this is Curve right now. If we look at Curve, it's also a staking platform. You can stake Curve, obviously. These are all blue chip applications, right? And it's the 17th most used application, as you see. And Curve is amazing. It has great utility, great use cases. You can it has over 2 billion locked in value in here. So it's not something small. It's a major application. But if you look at its core fundamentals, you see how it's lost 97.8, almost 98% of its value since the last bull run, right? So it's down 98% of its value is down. And this is not because it doesn't have utility, but simply because its token economics and fundamentals are horrible. This is simply because its staking platform is inflationary. And this is what we always discuss, always talk about. You need a sustainable staking distribution and staking platform. And if you have an inflationary staking platform, it's not going to survive. Our staking platform is scarce, meaning we started with 1 million, right? Let's go back here. We started with 1 million in total supply. Now we're down to 969,000. We are the only staking platform in the industry that is scarce, that is literally has a scarce supply, right? As we see here, all these staking platforms, like we see, they're all inflationary, right? We even looked at the smart contracts. We see they're giving you Aave tokens. These are Aave tokens that you get. Our staking platform accumulates USDC, right? So it's different. You see here, ours is USDC. It's not giving you a Bullrun token, it's giving you USDC. This alone stops this from happening. How can you be a blue chip token with over 160 million in volume and you are lost 98% of your value? This looks like a horrible meme coin, right? However, this is Curve. This is one of the most used platforms with over $2 billion worth of value on their platform. This is just to show you how early we are in this industry and how inefficient tokens are so inefficient, right, in this industry. And because I'm not bashing Curve, of course. Curve is a great platform, great tokenomics, a great utility. However, the tokenomics are not strong, are very weak, and it's messing the project. So to control the damage, right, which this is an obvious damage, if you lose your 98% of your value, even though you have over 160 million in daily volume, and we will do the math, and your platform looks like this just shows you how inflationary you are, right? So with this said, Curve, as you see here, same thing. They also have, with Curve, they came up with a new solution. So they were like, okay, we need to come up with something else because this is going to zero, basically. We messed up with our tokenomics. We need to come up with a solution. And this is where Convex comes in. Convex is another platform, basically a copy of Curve. But what Convex does is they accumulate Curve tokens. They're trying to help Curve to be deflationary, right? So the only job of Convex is to buy as much Curve as possible and to help Curve to be deflationary at least, right? But Convex itself have lost 94% of their value, right? And this is because what they do is they're buying Curve or taking Curve. You can stake Curve on their platform and they give you Convex tokens. So they're doing the same thing, trying to save Curve, but then they're now inflationary, right? That's why they're down 94% as well. So Convex is also a blue chip application. If we look at the list here, Convex is also here, they're number 25. So these are not meme tokens or any mediocre tokens. They have over $1.3 billion US dollars on their platform. So this is a big application, right? And nonetheless, they're trying to, this is what, if you don't do it right from the beginning, now you're trying to force things, you try to manufacture things, put things together to make it work, but it's making it even worse. So Convex was literally made or developed to bring deflationary to Curve, right? However, now it's not helping, first of all, because it's not helping Curve. Curve is still down 98%, still inflationary, and it's messing up Convex as well. They're down 94%, as you can see. And this besides having over 76 million in volume, and their chart doesn't look exactly the same like Curve. So they're trying to save a platform, but they themselves are failing due to weak fundamentals, unsustainable and inefficient mechanisms within the space, and their tokenomics are weak. Their token economics are very, very weak. And like we read here, These are basics. This is very important. You have to control your supply and demand. It has a huge impact. We're not even going to read on what. We're just going to leave it like that. It has a huge impact, right? And the projects that get incentives right, we're going to leave it at that. We're not even going to read the rest. All we focus on is on fundamentals. Everything else will fall in place. So, like we said, just like fiat currencies are all different, each cryptocurrency has its own monetary policy. Always look at what's Curve's monetary policy. It's horrible, right? What's Aave's monetary policy? It's not good. Compared to its volume, it's not good. And what's Convex's monetary policy? Same. They all have inefficient tokenomics, right? Their token is inefficient. They're inefficient with their trading volume. They're inefficient with their mechanisms. They're unsustainable. They have an unsustainable staking distributions, and they're not efficiently using their volume. So this is just to show us that this has nothing to do with meme coins, because meme coins have no utility whatsoever, right? But these are so-called blue chip utility tokens with billions of dollars locked on their platforms that many institutions, many whales are using. However, their tokenomics are horrible, right? So remember how we were saying at the beginning of this session, how eventually those who really, let's go back here, those who really find out, those who really come up with a solution, the projects that get the incentives right, they'll be a winner takes it all, period. You know, like BlackRock right now, BlackRock has 10 other asset managers that issued ETFs, right? But why is BlackRock the one with the deepest liquidity? Why are they the number one? Because winner takes it all. If you win, you take it all. And right now, we're still in the early stages. There's so many different meme tokens popping up left and right. And, there's so many blockchains. Every day, new blockchains are coming out. But eventually, there'll be a consolidation. There'll be only a few that will really be trusted. And so far, the winner, as far as smart contracts, is Ethereum by far. If we look at stablecoin alone, if we come here and look at stablecoin, let's key in stablecoin. So these are research community that we can do on our own, right? We can do our own. And we can now see how, let's come here, categories, and we can go here to stablecoin. And then we see the market cap of stablecoins. And this is very important, community, to really understand how impact the stablecoin has. And once we can really see this here, categories, stablecoin, it has a market cap of 163 billion. So 163 billion, these are all these stablecoins are in Ethereum blockchain, all of them. Tether, USDC, DAI, FDUSD, these are all on Ethereum. So majority of it is on Ethereum. This just to show you how, Ethereum has a large impact. All these largest applications, Lido, Aave, Maker, ETHFi, all of this, Uniswap, they're all on Ethereum. So this just shows you the impact that it has. It's very important to understand that. So let's move on. What's here? I'll close with that. So just like I showed you, it's very important to have the fundamentals right, community. That's the bottom of the line. We need to understand that what we need to take away from today is that you need to, first of all, control your incentives, right? What are the two things in the crypto economy? incentives that sets out how tokens will be distributed, and the utility of the token that influences its demand. Demand is important. You have to have your supply and demand under control, and that has a huge impact. And we see how huge that impact has. Obviously, we can see it right here. This is Aave. This is Convex. They're down by what? 94% due to their weak tokenomics and monetary policy. And so is Curve as well. So the way we should look at cryptocurrency, and this is the bottom line, we need to look at it as each cryptocurrency having their own monetary policy. This is how we should start looking at cryptocurrencies, right? And what are the incentives? What are the challenges that they are addressing? Are they developed for the long term? Will they be around post bull run? You know, what sets them apart? These are things that we should ask ourselves consistently, you know, and understand how important tokenomics are. You know, there are concepts that when making an investment decision, because this is important, because ultimately a project that has smart and well-designed incentives, this helps, right? And this will make, these are more likely to outlast and do better than any other project, you know, that hasn't built an ecosystem around its token. And we verified, we see what happens if you don't have a solid mechanism, solid fundamentals, sustainable tokenomics, you know, and you're inefficient. This is what's happening. And these are blue chip tokens. Now it's time to do some math. I was really looking forward to this because, you know, we can't end this session without looking at some numbers. So let's just look at some numbers. Let's take 100 million and let's look at how that will translate on our platform, right? And keep in mind, one thing before we do the math, look at how Curve, no, let's not go to Curve, let's go to Aave. Look at Aave. Aave is the third largest overall, third largest utility token in the industry, right? But look at Aave's volume, 137 million, right? This just shows you the power of retailers. If you give retail a solid platform that is sustainable, we can do miracles. Now let's go to a meme coin, right? That is a joke, that has zero utility, zero use case. It's literally a joke. And let's not even go to the top. Let's go to the bottom. Let's pick the lowest one in the first page. Which one is the lowest meme coin? Let's see. Okay, right here, 58, Bonk. Let's look at Bonk's volume. So Bonk's volume already surpasses that of the third largest utility token, Aave. It's close to 200 million in volume, right? This just shows you how meme coins literally, I don't like to call them meme coins, just like to call them community tokens because retailers are behind them. So, but if we go up and start looking at others, we see Flocky, for example, it has 310 million in volume. So that's double of Aave, right? And Dog with Hat, it has also double the volume, almost 390 million. And the farther up you go, the closer to 1 billion in volume, these meme coins, right? For example, Pepe, another meme coin, over 800 million in volume, right? And Uniswap only has 200 million, and it's the largest DEX on Ethereum. So a meme coin that has zero utility, zero use case, zero sustainability has 4 times the volume of a utility token. So you see how, what's the point of having utility and what's the point of having such high volume if you're not sustainable? That's exactly the point we're trying to make. Both of these are two extremes. You have a high volume, but you're inefficient. You're still unsustainable. You're inefficient. Okay, you have the best utility, but you're inefficient, right? We saw how Uniswap looks. We can look at Uniswap as well. Uniswap dropped by 77%. It also has a staking platform, right? And it looks very familiar. All staking platforms look like this. And it dropped by 77%, right? And even though it has over 200 million in volume, it looks like that. So this just shows you that more than utility is community. Community plays a major role. Now imagine giving a large community like this with a high volume like this, and now give them a platform like that. A platform that is literally sustainable, that literally understands how to retain liquidity, how to burn tokens, how to incentivize staking participants with USDC distributions, and has other utilities in place and mechanisms in place that bring stability to the ecosystem, like the 10% put aside as the bulldozer, like the booster NFTs that brings revenue for liquidity, right? This is what's missing, community. An efficient token, an efficient, sustainable ecosystem for the retailers, for you and myself, right? Because these tokens are just wasting so much volume and it's not going anywhere. It's not doing anything. We don't want to do the math with 800 or even, let's go to SHIB. SHIB has even more. Actually, Pepe has more than SHIB, more than double what SHIB has. Actually, Pepe has a higher volume than Dogecoin too. This is impressive. This is amazing. So this is just to show you that new community tokens are having even higher volume than those old ones, simply because they're already at what, 10 billion and 18 billion. So it will take way more to pump them than the smaller ones. It takes way less, right? So let's do some math now based on just using 100 million. I would like us to do some math and see what a sustainable ecosystem can do with 100 million in volume, right? So just for the sake of math, and let's keep this in mind right here. Let's keep this in mind, or even this in mind. This is curve, and we see how inflationary they are. Due to that, they've dropped 98% of their value dropped because of because of their horrible tokenomics. And let me zoom in here. This shows you, I want to show you something here. I hope you can see it. This shows you that you have to lock, there's a minimum of 1 year, right? You see here, a minimum of 1 year. You are locking your tokens for an entire year, up to 4 years. So the longer you lock, the more your USDC, your staking distributions are being boosted. So only those who lock for 4 years are getting more boosts. The way we're doing it is with NFT, right? All you need to do is purchase your 5 NFTs, you get your 100% distributions, right? And there's no locking period, unlocking period, none of that. Nobody tells you to lock up your token for a year or 4 years. However, like we saw here, Curve, the least you can lock it for a year. That's minimum. But you can lock it up to 4 years. And why would you lock your tokens for 4 years with tokens that are inflationary like this? It doesn't make sense, right? And this is why Aave has such a low staking. You see, there's only 17% staked, and majority is probably the team and the protocol that's staked, because nobody on the right mind is going to stake. And Aave is not even as bad as Curve. Curve is worse. So now let's do math here based on the 100 million. If we had 100 million in volume, let's do the math here. Let's see what will happen. Let's start with the 1%. 1% of 100 million is 1 million, right? So what does that mean? If Bullrun had 100 million in daily trading volume, and keep in mind, we are undershooting here, right? We went to, this is the lowest meme coin, and it has close to 200 million, right? We're not even taking the ones of larger meme coins. So we're just using 100 million, which is really not, once you up there, 100 million is normal. So 100 million, right? That means 1% of 100 million is 1 million. So that means that 1 million worth of tokens are going to be burned, of BRL tokens. At the current price, at this current price, if you take $1 million, right, and it's 42 cents right now, and multiply by 42 cents, that's 420,000 tokens. Now keep in mind, we have set a limit. You can only buy a 5,000 BRL tokens at a time. So this is not going to happen. Nobody can just come with $1 million and buy $1 million worth of tokens. So this is why you see the number. It just shows you how many BRL tokens that will be burned. But we have a, based on our smart contract, you can only buy 5,000 maximum at a time. So nobody can just come up, no whale can come and just grab everything, you know. But this just shows you that the potential of just 1 day worth of volume theoretically could have bought 420,000 BRL tokens at this current price, just theoretically. And we are at 900 right now, below 970, like we saw here. And this supply shrinks, meaning that with every buy and sell, this supply shrinks. It's at 969,000 right now. We started with 1 million. So immediately, with that million at this current price, half of the supply right now would have been gone within 24 hours. And this just is mind-boggling, right? This just shows you the potential of this mechanism once it's in place. And give this 30 days, 100 million volume, this supply will be gone. This supply will be gone. It will be gone. And at the same time, and let's get to it, that's just the burning. Let's look at the USDC distributions. It's also 1%. That means those who are staking, I showed you our staking platform, right? Our staking platform accumulates USDC distributions based on the volume. So based on 100 million in volume, 1% of that 100 million, which is 1 million, gets transformed into USDC. And this is what the stakers get. So every 24 hours, based on 100 million in volume, 1 million USDC will be put in our smart contract. This is a smart contract. It's the staking contract, right? And it compared with Aave, Aave gives you Aave. It gives you more Aave, right? It's deflation, it's inflationary. But our smart contract doesn't give you more. You don't see BRL tokens. It gives you USDC distributions, right? It gives you USDC. So this means that those who decide to stake will be part of this 1 million pool that they're getting just by staking their tokens, right? Let's go back to this. 1 million worth of USDC every day, and 1 million tokens worth of BRL tokens will be burned every day. Now, the sweetest part is liquidity. Liquidity is 3%, right? So that means we'll have to multiply this by 3. So $3 million worth of liquidity every day will be added into the liquidity pool, right? So every day, 3 million will be added to the liquidity pool. Now, how significant is this? Let's look at the largest community token right now on Ethereum. We all know which one it is. I'm not even going to say the name, right? We know it. So let's look it up and just see what's their current liquidity. What's their current liquidity? The current liquidity is, let's round it up to 57 million. That's their current liquidity, 57 million. What's their volume? 300 million, right? We just did a math with 100, 3 times less. So their volume is 3 times more, 322 million, and their liquidity is 57 million right now, right? So with our tokenomics, if you have 100 million in volume, you will get 3 million in liquidity. So this tells me that within 3 weeks, in less than 3 weeks, we will have surpassed Shiba's liquidity, because this is for 1 day. 1 day gives you 3 million, right, in liquidity. This is just 1 day, 24 hours. So let's multiply this by 20. Just 20 days, that's 60 million. So it will take us, based on 100 million volume, it will only take us 20 days, less than 3 weeks, and we will have a deeper liquidity, 3 million more liquidity than the largest community token on Ethereum. The topic today is token inefficiencies. Keep in mind, they have 3 times more. We only calculate with 100. So just to be fair, to have an idea if we really had the 300, let's look at how much that would be. So we'd have to take this and multiply by 3. So in less than 3 weeks, based on their volume, would be having 180 million in volume, in liquidity. That will be more than 3 times more than what they have in less than 3 weeks. This is why we say the market is very inefficient. The token inefficiency is here. The volume is not being used accordingly to develop a sustainable and maintain a sustainable ecosystem, right? If you don't build an ecosystem around your token, it's not going to do well, right? A well-built platform often translates into higher demand over time as new investors flock to the project, right? And this is very important. You have to have a well-designed incentives, right? And in the long haul, this is more likely to outlast and do better than the project that doesn't have an ecosystem built around it. And we just checked it, we just verified it, and we saw that it will, within less than 3 weeks, will have 3 times more liquidity than the largest community token in the industry, right? And let's go back and do the math, finish the math. Let's take this off. Let's just take this. This is in 1 day, right? 100 million 1 day. Now, let's do the math for 1 month. This is 1 month based on 100 million, right? Now, let's do 1 year times 12. We're at 1 billion now. Keep in mind, this is a community token. So it will take us 1 year, only 100 million in volume for the whole year, 365, actually 360. And we will be having $1 billion in liquidity. We just looked at the largest community token, right? It's the number 7, I believe. No, number 11. Let's go and check. Number 12. It's the 12th largest cryptocurrency in the space, in the industry. And it has 57 million in liquidity, right? And it will take us 1 year to literally go toe to toe with Bitcoin. So we won't be competing with community tokens anymore as far as liquidity is concerned. We'll be competing with the likes of Bitcoin, right? Because within a year, we'll have $1 billion in liquidity. And usually, your volume is always higher than your liquidity. Your volume is always more than your liquidity. The higher your liquidity, the higher your volume, right? You see how Bitcoin has 1.2 billion in liquidity and the volume is 33 billion. So just to do even more math, let's say once we achieve this billion in liquidity after the first year, let's calculate the second year with this billion, right? So let's calculate the liquidity that we'll get after the first year, because now we have $1 billion in liquidity in the first year. So let's calculate, let's take 3% from this for 1 day. This is a daily volume, right? So 3%. So we'll be adding 32 million in liquidity. This just based on 1 billion in volume. That's 32 million in liquidity every day, right? Now let's look at for the month. Times 30. That's 972 million for the month, just 1 month, right? So in 1 month, after the first year, we'll be having almost the same amount of liquidity like Bitcoin within a month, every month. And it took Bitcoin 15 years to get to where they are. Inefficiency, just token inefficiency. Now let's calculate for the year, right? This is 1 month. Let's do 1 year. Now we're at 11 billion. 11.6 billion in volume. No cryptocurrency has that type of volume. I mean, liquidity. Nobody has that type of liquidity, not even Bitcoin. So this would be 10 times the liquidity of Bitcoin after 2 years. In the second year, we will have 10 times more liquidity than Bitcoin. So now back to attention, back to what we just said here. Well-designed incentives. What are our incentives? Is our tokenomics, efficient tokenomics. They are more likely to outlast and do better than projects that haven't built an ecosystem around it. And this is just based on the liquidity based on our buys and sells. This has nothing to do with the 10% that is being staked. This adds liquidity. And this has nothing to do with the boosters that will be bought and also added to liquidity. And this has nothing to do with our bulldozer effect, where you and me, the community, right? This is the home of the bulldozer. Community doing the same thing, compounding. So these numbers are just minimum. That's the bottom. Everything else is extra. So this just to show you, I just wanted to do the quick math to just show us the potential of our ecosystem and how it's battling inefficiency that we face in the market. We looked at Aave, we looked at Convex, we looked at Curve, we looked at Uniswap. They're all suffering the same inefficient tokenomics. And if we look at our, as far as liquidity is what gets people going. Liquidity is what really brings in traders. And it will take us 2 years. It will take us 1 year to be on the same liquidity level like Bitcoin, only on 100 million volume. And it will take us 2 years to have 10 times more liquidity than Bitcoin itself. So that is what will really set us apart. Because now if people ask, well, why should I be in the Bullrun ecosystem? Why shouldn't I get Bitcoin? It's simply because you can cash out your tokens, right? You can literally cash out. If we had billionaires in the Bullrun ecosystem, individuals with $1 billion, they'll be able to cash out because there's 11 billion in there. So if billionaires want to cash out, they can. But they can't do that with Bitcoin right now, right? If one wants to cash out, it will be gone. It will be a rug pull. So liquidity is important. Token inefficiency is a big issue in the crypto space, and this needs to be addressed. This needs to be looked at. And if you don't do things the right way from the very beginning, you'll see developers start crying here, right? They're watching entitled airdrop farmers complaining about their allocations, and then in the same breath, these farmers immediately dump. They dump the tokens and move on to the next. Eigenlayer is a blockchain, ZK is a blockchain, ZRO is one. They all have similar behavior. We need to do better. Time to innovate again. If you do things the right way from the very beginning, you don't have to innovate. You innovate from day one, not after 5 years, right? Or after 3 years. You have to innovate from day one. And once you do that and you do it the right way from day one, you won't have to worry about all of this. And because you have an efficient liquidity accumulating token ecosystem, ETFs won't mean nothing. People are purchasing ETFs because they're liquid, right? Why would you buy ETF if you can buy Bitcoin? If Bitcoin had our tokenomics, our mechanisms, Bitcoin should be having hundreds of billion in liquidity just based on their volume alone, right? Let's do the math, 34 billion. Let's see in one day how much liquidity Bitcoin is supposed to have based on our tokenomics. based on our tokenomics, Bitcoin is supposed to make $1 billion in liquidity every day, just in one day, based on this volume right here. So every day, Bitcoin, if it was efficient, it's supposed to make $1 billion in liquidity every day. What it has in 15 years, it should be making it every day. So just to put it in perspective, this is one day. Let's look for a month. Bitcoin is supposed to have 30.6 billion just in 1 month. Just in 1 month alone. So 6 billionaires can cash out easily after a month, and it won't even bother anyone. Let's look at for the year. Bitcoin is supposed to have, in 1 year alone, over 367 billion in liquidity in one single year, based on this volume. The topic today is token inefficiency. But Bitcoin doesn't have our tokenomics. They're not built to retain liquidity. And once we reach the level of volume, and once we reach the level of liquidity that we need that will attract more traders and generate more volume, this is the potential that we can have. And if Bitcoin was efficient, the Bitcoin ETFs won't be a thing at all, right? Because BlackRock doesn't have this type of liquidity. BlackRock doesn't have 367 billion in liquidity. And this is something Bitcoin will have in 1 year if they had our tokenomics. Just 1 year alone. BlackRock doesn't have anything close to this. And this is why we say tokens are very inefficient, and they're developed from day one very inefficient. This is not just Ethereum. This is not just Bitcoin. These are all other community tokens. Even Ethereum is not collecting liquidity, right? So this is why if we hear us stressing on liquidity, how we retain liquidity, how we are efficient, how we are scarce, how we are sustainable, we have sustainable staking distributions. After today, we should all be aware and understand how efficient our ecosystem is, and the potential of it, and how it has a mechanism that goes beyond buys and sells. We have liquidity mechanisms also with the 10%. We have liquidity mechanisms with our boosters as well. And then the entire community, of course, also can add to the volume and to the liquidity. So we have 3 different ways to add liquidity, right? And on top of the taxes. So we have 4 different ways to add liquidity and volume to our ecosystem. So we have a very efficient, sustainable platform that if we can rally behind as a community and come together and put together 10,000 people, 100,000 people, a million people behind this ecosystem and start generating $1 billion in volume, we just saw what's the potential, right? And Bitcoin is missing out on over 367 billion in liquidity. It's stuck at 1 billion for 15 years because it's inefficient, right? It's inefficient. So for decentralized projects to avoid ETFs, to avoid BlackRocks and Goldman Sachs and Citibanks and UBSs to take over the crypto industry, we need to focus on retaining liquidity. If we don't, then asset managers, financial institutions are going to take over the blockchain industry. And there's nothing that we'll be able to do. So if we want to dominate, that's why we say winners will take it all. And we want to take it all, right? So if nobody wants to be sustainable, develop something that retains liquidity, let us be the ones. Let us be the ones then. And in the way it works is winners take it all. So that's the aim. We want to take it all. We want to dominate. So that's it for today. And there's one way I want to close this. I want to close this session with this article right here. 13 years ago today, Peter Schiff dismisses Bitcoin. And back then, Bitcoin was only $17, right? So this individual he doesn't think much of Bitcoin whatsoever, cryptocurrency generally. So this was at its first radio interview 13 years ago today. Bitcoin was $17. Ever since, Bitcoin has outperformed, like we always say, it outperformed all 4 asset classes, which is gold, stocks, bonds, and the stock market, right? And the entire Wall Street, right? So real estate, gold, stocks, bonds, it outpaced everything. So, and this is done just because Bitcoin was adopted. It's just mere adaptation. It's just being adopted. Bitcoin is not producing anything. They're not manufacturers of things. It's just a technology that is being adopted. And that alone is enough to outpace the gold, stocks, bond, and real estate market together, combined. And this is done by a inefficient liquidity. They're not retaining liquidity. They're not deflationary or scarce, but still they did it based on adaptation alone. So this is just to show you that there are many more technologies, many more blockchains, many more efficient projects that are about to be deployed that are not even deployed yet, that will be way more efficient and that will outperform way more than even this. With time, this just shows you that over time, if you have something, imagine, this is an inflationary token. So what will happen with a scarce token, one that actually has a supply that is shrinking? How will that work? If your supply is shrinking over that period of time, what is that going to do? Because this Bitcoin has an increasing supply. The supply keeps increasing, right? And still it did that. So what about Ethereum, that supply keeps shrinking because it's deflationary? And what about Bullrun, that has a supply that is actually scarce, is reducing? So I'll let you marinate on this, community. And I hope this session today was informational and educational. And I hope, most importantly, it was inspirational to all of us. I hope it opened our eyes and it really puts us in a situation where we have a better understanding and of the importance of having a sustainable token economy, right? And how inefficient our markets are right now. If we're looking at the top applications, they have great utilities like Uniswap, Aave, Lido. These are all amazing. Lido is number one. We haven't even looked at Lido, but same thing, right? Same thing. Everything that you can stake, if you look at it, you see from its top, it's all the way down. If you're inflationary, you face the same. It's down 78.898, so 79% down. And Lido is the number one application, and its daily volume is over 200 million. 200 million in daily volume. We just did math with 100 million, and we saw what would happen. So community, this just to shows you that there's an inefficiency in the industry. That's how early we are in this space. And because we developed the platform from day one with the strong fundamentals that are sustainable, eventually only time takes, just time, and to go through bull cycles. And we are eager to see what happens to a commodity that is actually scarce, that is dropping its supply with every buy and sell. So that's it for today, community. Let me share my screen again and come back to you, check with you if there's anything that you want us to go through, any questions you have before we close it out. Let me share this with you. Come back here. Let me come and check with you again. We have Queen Rose here. Good evening, Steve. Good evening back to you too, Queen Rose. It's a pleasure having you here today. We have Queen Shayla Sebenzile. Good evening, my lovely queens and brothers. Good evening to you too, Queen Shayla. Always a pleasure having you here with us. and none other than Queen Mother Winner. Greetings, queens and kings. Hope we are eager and ready for a long-awaited bull run. Feel honored to be part of this amazing community. Thank you, Steve, for your dedication and educating us. It's a pleasure. We want to thank you too for all your efforts, your leadership, your consistency, all these tweets you put out every single day with the support of our community. Brother Crypto Riser, Queen Val, they're working together to really, or individually also, to put together beautiful banners and that we can use and put the word out. So thank you so much as well for all the efforts you put in. DeFi is still in its early development stages and hasn't seen a major adoption from mainstream investors. Absolutely. Imagine how early we are in. This is why you see these inefficiencies. There's so much inefficiencies that we as an ecosystem, we as a community are addressing these inefficiencies. We've solved these inefficiencies from day one. This is major, community. All we need right now is just adaptation. That's it. And we looked at some numbers. We played around with some numbers today, and we saw the potential of it. So our attention will be known as the community with the deepest liquidity, deeper than Bitcoin itself, right? The one that burns the most tokens, the one that issues the most USDC distributions, and most importantly, the one that is sustainable and puts the community at heart, And these are the things that will bring attention to us. We won't have to speak, we won't have to talk, we won't have to campaign. Anybody can go to Etherscan and see how much USDC we have, how many tokens we've burned, how much liquidity we have. And if you compare it with Bitcoin, we'll have more liquidity than Bitcoin itself as a community token that is decentralized. There is nothing out there like it. So absolutely, you're right, Mom. We are very early in this stage, and we need to do things right from day one. And we won't have to start fixing things or solving things like Carve is trying to solve things with Convex. It's making it even worse. We won't have to do that. Thank you so much, Mom. Again, greetings, queens and kings. Hope you're eager and ready for a long-awaited bull run. Feel honored and humbled to be part of this amazing community. So are we. Really, we are very humbled to be part of this ecosystem and community. My great brother Abdullah, warm greetings to you all. I really have to commend you for all the beautiful comments you put out on all social platforms. They are very much appreciated. I've been pinning them because they are very informative, and you take your time to really put out great comments. I want to appreciate you for that, Brother Abdullahi, for all the efforts you put in. You're very much appreciated. Queen Mother says DeFi is still in the early development stages and hasn't seen a major adaptation from mainstream investors yet. Looking forward to a historical journey with our awesome, hardworking Bullrun family. Absolutely, very well said. It's amazing, It's amazing because if we really understand the potential that we have and we come together as an ecosystem, we can really make this happen. And this is the aim. We can only do it as a community. Brother Franklin, a pleasure seeing you again around. It's been a while. Nice to see you in the community as always. Greetings to BRL family. This is nothing but revelation and not just a chat. Thank you, my brother Steve. Thank you too, Brother Franklin. Always a pleasure seeing you here. We have Queen Salang is here. I'm super excited. I've learned a lot tonight. It's a pleasure. That's a great feedback. Pleasure to have you here, Queen Salang. And our aim is to really be informed and educated and to inspire the community. That's it. So we can all understand and look at the ecosystem as the industry from a bird's eye view and have a better understanding. Queen Val says, absolutely, Mr. Steve. And deflationary and sustainability speaks loud for us. BRL is king. Thank you for the detailed enlightenment. Community, let's all leave a comment after the live and ensure to like. Beautifully said. Absolutely. This is very important to reach as many people as possible. Thank you, Queen Val, for that. And yes, absolutely. Deflationary and sustainability speaks loud for us. And that's exactly what sets us apart. You know, bringing in deflationary and sustainability. That's very important. Brother Dave says, I did some calculations and estimated our current floor price for BRL at 14 cents. Is this something you can comment on? As you know, as developers, as founders, we really don't go beyond speculating or calculating prices. But I'm glad that you can do that. All we can say, talk about is the fundamentals, and that's what we focus on. Everything else literally will take its course. But one thing I want to add to what Brother Dave said here is that because our buying mechanisms, our fundamentals, especially remember the supply and demand, we have a staking platform. You remember how we looked at circulating supply, total supply, and max supply. The staking platform is in charge of circulating supply. So because we have a staking platform, the circulating supply will be removed. You see how we have over 54%, almost 55% staked. So those tokens are removed from circulating supply. And remember how we have a banning mechanism. Banning mechanism removes tokens from the total supply, right? And our max supply was at 1 million and it keeps shrinking. So based on that information, you can really understand what Brother Dave is trying to say here. So just keep that in mind. Staking platform removes tokens from circulation, and banning mechanism removes tokens from total supply. So keep in mind, supply and demand play a major role, but we can't go beyond that as founders. So unfortunately, there's no comment I can put on there. We can only teach on fundamentals, on how our ecosystem works. The rest is up to you to piece together and just to understand what's happening. But we want individuals, want the community to be with us due to the fundamentals, right? Due to our sustainability, due to our banning mechanisms, due to the win-win mechanisms that we have, that the traders win, the stakers win. And we did some math, right? Just to throw some numbers and just to show the inefficiency within the market, within the industry. But that's as far as we can go. We don't want to go beyond that. We want you to do your own research, calculate your own numbers, and make informed, educated decisions based on our fundamentals. So we just want to focus on fundamentals. But of course, we appreciate the community for doing numbers, doing calculations, speculating. That's fun, but that's left out to the community to do. It's not up to us. Queen Nancy, I appreciate the knowledge you are always sharing with us in your sessions. Great presentation, Steve. Thank you so much for the hard work you're always putting in. Stay blessed. Team BRL. Always a pleasure, Queen Nancy. Thank you for your commitment, your efforts, your hard work, and your dedication. You're very much appreciated as well. It's always a pleasure having you within us, within the ecosystem. We have Queen Mel here. Thank you so much, Steve, for all knowledge you give us. It's a pleasure. Thank you too for always showing up, because you showing up will bring curiosity. Others will be curious, like, where's Queen Mel always going to listen to all of this? Let me also listen in. She's always consistently showing up on these YouTube sessions or Twitter spaces or VCs. Let me follow her today and see what she's listening to. So you're also very much appreciated for always showing up on these community events. My great brother Theo says, my great brother, thank you again for having the extraordinary vision, heart, work, ethic, and love to put this all together. Thank you so much, great brother Theo. Always a pleasure hearing from you, reading from you. I hope you and yours are doing great. You're very much appreciated as well. Queen Mel says, I'm glad to be part of this platform. We are very glad to have you being part of this platform as well. We have Queen Irene here. Thank you, Steve, for opening our eyes in cryptocurrency world. You are such a blessing. You are a blessing as well to us. Thank you so much, Queen Irene. You are very much appreciated. Thank you for taking your time and being with us today in this community event today on YouTube. Uncle George. Nah, the uncle. Hi, Steve. Blockchain technology provides Africa an equal opportunity to invest in high-stake crypto investment. We thank you, Steve, for your eye-opening educationals. Thank you, too, for all your efforts, all your hard work. You're very much appreciated, Uncle George. I see you on all platforms. Your campaigning and your insights, your feedbacks are very much appreciated. Thank you very much. Here he is, Brother Abdullahi. Bravo to you too, my brother Abdullahi. You're very much appreciated. All your efforts are not in vain. We see all your efforts and we thank you so much. Brother Glenn says, I believe that to reach that million people is marketing and you doing AMA on other live and X space. So those in other communities, what's the plans for an AMA marketing push? Like I always say, all the marketing and all that is in the hands of the community. That's why it's a community-driven project, and this is why this is decentralized, right? One of the how we test is if the founders are the ones doing the marketing, doing the teaching, and pushing the project, that's considered a security, and we should know that by now, right? So the founders cannot be engaged in any marketing activities and all of that, soliciting individuals. That's a security, and we want to stay far away from that. All we'll do is we're here to inform, educate, inspire, and that the community can take charge and do that, just like I did with SHIB. We never saw SHIB devs campaigning, doing AMAs, and doing marketing stunts. It was me, right? It was me and other community members that did all the marketing, did all the education. So it's time for the community to step up, pull up their sleeves, just like the queens are doing. I've not heard any queens saying anything. The queens are doing the marketing. They are putting themselves together and working hard to put the word out. So it's time for the community, especially on the men's side, to also pick up and pull up the weight as well, just like the queens are. We need to organize ourselves as a community. This is a decentralized platform, so everybody should pull up their weight, put in effort, and this is how we can grow. It's not just in the hands of the devs and the founders to do marketing, especially. That's considered soliciting, that's considered failing the Howey test, and you can't do that. We just can't do that. So it takes a community to make this happen. So I believe we should all by now understand this. This is a community-driven project. It's not a founder-developer-driven project. It's decentralized, meaning that everybody is free to add value. This is why we do our part, right? We do the 3 weekly events. We have Zooms open every single day. Queen Val is leading that very consistently. We have the Sundays, Queen Mama Wino is doing that. We're already doing our part as developers. We developed everything. We came up with the concepts. We are educating. We have platforms open. The community also should do their part, and as far as marketing and all that, and put in some effort as well. Queen Lorato is here as well. Welcome, Queen Lorato. First time joining the platform. I'm super excited to be part of this ecosystem. This is a massive project, Brother Steve. Thank you so much. Thank you so much. And first of all, welcome, Queen Lorato. You are very much appreciated for showing up and being here today with us. Welcome to the community. I hope you saw the links to the Telegram groups, to the Twitter spaces, to the follow us on all social platforms. Welcome, feel free. at home, feel right at home. And I hope that we'll be seeing you around more as you gain more knowledge. And thank you for choosing us to go through the crypto journey with us. So welcome, Queen Lorato. My great brother Theo, my great brother, thank you again for having the extraordinary vision, hard work, ethic, and love to put this all together. You're very much appreciated also for all the efforts that you put in. Allow us all to ride along on this journey with you as we grow and add our own special gifts to this brilliant ecosystem and movement. Beautifully said, beautifully said. Nicely said. What Brother Theo is saying here is that we all have to add our own special gifts to this brilliant ecosystem and movement. You know, it takes all of us. We can't just rely on a handful of individuals, because it will not work that way. That's not how blockchain is supposed to work. Nobody knows Satoshi. Satoshi never had an AMA. He never had a marketing campaign. But everybody's talking about, people are doing what they need to do. Devs are working on Bitcoin. Influencers are shilling Bitcoin. Content creators are talking about Bitcoin. And same thing was with SHIB. You take what you need to do what you need to do, and that's it. You know, most developers of these meme coins, they're anonymous. Nobody even heard their voices. They're not even active in the communities, but still these tokens are reaching billions of dollars in market cap. And that's because the community, right? It's a community that is behind it. We've been through that with SHIB, we've been through that with Saitama. So we know how it works. You know, it wasn't the devs, it was the community, right? It takes the community. And that's the beautiful thing about crypto. So well said, Brother Theo. Everybody should put their own special gifts and add to this ecosystem. And that's the only way we can really take this movement to the highest level. It's a decentralized community, right? We as founders, to be compliant, to abide to the regulations, there's some things we can't do and go beyond. And we should all know that by now. We should know that by now. History will remember your name, my great brother. Thanks again for everything, and please stay blessed and safe. You are part of it, Brother Theo. You're part of history. We all are part of this history. We're all making history. And that's the beautiful thing. We can do it as a collective, as a community, and we can all rely on each other, and we can all contribute our skills, our talents, our time to the benefit and the betterment of the community, of the ecosystem, right? We all need to be just consistent, like the most of us are. Just be consistent, showing up, engaging. That's all it takes as a collective, that's all it takes. We have Queen Alice here as well. Steve, this is fantastic. I thank God for you. I believe this is a game changer. Thank you so much, Queen Alice. We are all game changers here. Every contribution that we make individually, collectively, adds to the game-changing aspect of it. We're just doing our small part, on a consistent basis, 4 times a week, daily on Zoom. That's the least we can do. And if anybody chips in and adds value, the better. So if we all can chip in whatever little we can, whatever gifts we have, whatever talents we have, like Brother Theo said, we'll achieve a lot. If it's like Brother Abdullahi makes amazing comments, he grabs a lot of attention. We have Brother Cryptorizer making amazing banners. We have Queen Val every day on Zooms. We have the Queens every Sunday making campaigns, bringing in more individuals, educating people. I mean, we all have to chip in. That's the only way it will work. We can't rely on influencers or on other communities. We have to rely on our own strength, on our own community, on our own, and charity starts at home. If we do it right, then we don't have to go and look out for others. We'll have people to want to join us, because we know what we're doing and we are dedicated, we are committed. And our Telegram is growing. We have a very solid presence on Twitter. So we must be doing something right? So we are growing consistently. We're not cutting any corners. We're putting in the work, we're putting in the effort consistently. That's all we need to continuously do. If anybody chips in and does, their part, we'll go a very long way. With that said, community, thank you very much, everyone, for being part of this session today. We are very humbled that so many people showed up today. You took your time on this Thursday to be part of this session today. It's not taken for granted. It's very much appreciated. Thank you for your kind, warm feedbacks that you gave us. Thank you for your feedbacks. Welcome all of you newcomers in the community. We are pleased and humbled to have you here with us. Let's walk together through this crypto journey as we are embarking to achieve our goals, as a community. So everybody, I encourage you to chip in. Everybody's adding value, putting in what they need to add, and we are very pleased. And we are the ecosystem with the most queens, and the queens have really taken charge. I want to commend all of you for all the efforts you put in, for all the dedication, all the commitment. Even now in this chat, there are more queens than men here. And I want to commend all of you and thank you all for all the efforts you put in. Thank you for your dedication, your hard work, for bringing in new people to educate them, doing all these seminars in different countries. Started in Kenya and then somewhere else again. I don't want to say a wrong name, but it was another country again as well. So all these Zooms that you're making, all these meetings that you're doing, bringing in new individuals, you're very much appreciated for all the efforts you put in. With that said, community, I want to wish you all a wonderful rest of your week. And I'm really looking forward to our next community event, which will be on Saturday. So till then, I want to wish you all much peace and good health. Thank you once more for being part of this session today. You made it a success. I was very pleased. I had a lot of fun and it was nice engaging with you, community. With that said, I want to wish you all a wonderful rest of your week, and at latest, let's meet again on Saturday. Again, welcome all the newcomers. Feel right at home. Looking forward to seeing you in the chat and in our next community events. Bye-bye, everyone, and have a wonderful rest of your week.